Hi everyone, my name's Stuart Chan. I'm one of the partners of Cutcher Neale. And today I'd just like to introduce you to Mike Cooney so he could talk a little bit about ETFs or exchange traded funds, because I've been getting a lot of questions from clients and having a lot of conversations around these. So we thought we'd provide you some additional insight. So I'm going to hand you over to Mike Cooney now.
Yeah, an ETF is an acronym that stands for Exchange Traded Fund and is named so as you can access ETFs the same way that you would buy stocks, such as on the Australian Securities Exchange. Now, there are many advantages of using exchange traded funds. They are easy and affordable way to gain exposure to a range of local and international asset classes and thereby easily diversifying your portfolio.
Thanks, Mike. What should investors be thinking about when they're considering ETFs as part of their investment portfolio?
ETFs have become popular in the last few years in Australia thanks to the rise of index investing and a shift away from actively managed funds. Now, to explain index investing is whereby you're looking to buy a whole index and not attempting to pick the winners. Now, one of the most commonly traded ETFs in Australia is the reflection of the bellwether index, the S&P ASX 200, which are the top 200 listed stocks on the exchange in Sydney. Now, an index investor known as a passive investor will buy all 200 stocks in the ASX 200 at their market weights when they buy the ETF. For example, $100 invested into an ETF, such as the ASX 200, well, you would be purchasing approximately $8.50 of the Commonwealth Bank, which is the top weight in the ASX 200 index at 8.5%, with the remaining $91.50 spread over the other 199 names. Now, CBA is trading at more than $100 at the moment, and this is a great way to get exposure to a broad group of stocks. But as an active investor, we believe that there are some of those, there's 200 stocks, or many of those 200 stocks we just don't want to own, or we disagree with the weights that are applied. So another way of looking at this as a passive or index investor is that they're looking to buy the whole haystack and hoping to find or to have some of those golden needles inside, whilst an active investor is working very hard to find those golden needles.
Great visuals, Mike. Golden needles in the haystack. So is there a role for these ETFs in these more actively managed portfolios?
Yeah, we definitely utilise the characteristics of ETFs in our portfolios. And one that's a significant weight in our international model portfolio at present is the BetaShares India Quality ETF. Now, as mentioned, we prefer when we can to find those golden needles. However, given the huge amount of red tape and complexity to trade direct stocks into India, this ETF removes a tremendous amount of regulatory and administrative issues. Now, India is a very exciting investment opportunity to invest in and one of the fastest growing economies in the world, and has been a very successful investment and one we continue to hold to today.
Thanks, Mike. I've also had a lot of questions about thematic ETFs. Can you provide some information around that, please?
Yeah, Stu, immediately after Joe Biden's presidential election victory in November, we purchased the iShares Global Clean Energy ETF. Now, this is a great example of what's known as a thematic ETF. And this is where you have a specific industry or sector or investment thematic. And by buying one transaction, it provides immediate exposure to a wide basket of stocks for this example, the clean energy or renewable sector. So with Biden's victory, this was a huge about-face in US policy around environmental issues and was exemplified on day one of Biden getting into office and re-signing the Paris Climate Agreement.
So what should investors be thinking about when they're considering ETFs?
Yeah, once an investor has decided upon their investment thesis or preferred exposure, then an investor should consider an ETF with enough liquidity. That's effectively the amount of trades, ensuring you've got the ability to get in and out of a trade with relative ease. Now, this would generally link to the notional or funds under management that an ETF holds. Generally, the greater open interest in an ETF, the more liquid it becomes. We'd look for a reputable ETF provider and an underlying index that the ETF is based on from a trusted source. We'd also consider the management fees. Now, ETF providers do have costs and will charge a fee. Now, this should be quite small, as effectively they're not doing any investment decision making or making any stock analysis that's taking place. It's purely their ability to track an index. One further point is, what are the ETF provider using as the underlying? ETFs can access investments in many different ways, in physical or synthetic form. Standard ETF provider would have purchased the underlying assets on the index to replicate the basket of stocks. So, for example, the Aussie basket of ASX 200. Now, synthetic ETF are trying to replicate the performance of an underlying index by using derivatives. This is because it's not always practical to hold physical assets. So that would be, in one case, buying bars of gold. It's not easy to do. So what they would do is generally buy futures to replicate that underlying index and track that commodities price movements.
Thanks, Mike. That's great information about ETFs. Please note, everyone, that the video is provided for education purposes only. If you're thinking about using ETFs as part of your investment portfolio, please seek appropriate investment advice and reach out to Mike Cooney at cutcher.com.au or myself. Thank you very much.